The difference between myself versus a bank and the banking world comes down to what is being underwritten and how you're evaluating risk is how I would. So if I'm to put it in two buckets, you can evaluate the asset itself, the hard asset, and how it's performing and what it's worth, or you can evaluate the individual. Banks will largely, if you're to weight the two, largely underwrite the performance and the creditworthiness of the individual. And it's not to say they won't look at the asset. They still will. That's why you get an appraisal and all that good stuff. A private lender will put a lot more weight in the asset itself. So people also refer to it as asset-based lending because they're weighting the asset and the underwriting of the asset more than they are the creditworthiness of the borrower, and vice versa. We're still looking at the borrower. I want to make sure that they're not going to just not pay me from day one to some extent, but I do know I can sleep well at night knowing I'm well collateralized and that asset is really strong collateral for me.